Good afternoon and welcome to Fish Wrap, episode 22 from sunny Blue Earth, Minnesota. I'm your host tonight, and today, Dina Lair, my usual cohort here. Janie Hansen is taking the week off and spending some time with friends down at Lawrence, Kansas. Hopefully she'll bring back some news about the harvest as it swings through the Interstate 70 area. But at any rate, let's get right to the show today. Drought continues to dominate the news and dominate the trade. We've got a situation not only in North Dakota now, but it's spreading into Montana and a bit of Idaho, and of course the blistering heat in Washington and eastern Oregon just this last week is really bringing some pressure onto the spring wheat crop and some of the corn crop right now. But at any rate, we had 116 degree temperatures east of the Cascades in Oregon and Washington, and just literally melting out there. So having said that, this is not a 1988, because 88 was over by this weekend back then. So as all droughts, every drought, every year, everything is different. Quit trying to fit everything into a same pattern. As we've seen, the real trouble in coming into Montana, but also creeping up into Canada as well. So spring wheat is definitely in play right now. Spring wheat had a big week, moved from the $7.60s, $7.70s up to the $8 area again. So it's trading above $8 again. Continues to spike against the other wheats. So that was definitely the play of the year, when you could have bought all the spring wheat you wanted 20 under Chicago. And now it's more like $1.50 to $2 over, depending on where you're at on the board. So having said that, we've got a sharp eye on that. From our crop optimized standpoint, and we discussed that in our hedge report for our customers, is that we are maintaining our position, and we are not continuing to hedge into this thing, because we really have to see this drought break apart a little bit before we can start laying into this thing with hedges. So if you want to see how much we're hedging and how much we're doing and what we're doing in spring wheat, get on croptimize.com and download and get started with Croptimize Pro with us. Also, we're beginning to see drought creeping into the Midwest area, which is not necessarily threatening corn, but yet we are coming into silking. We are coming into, the pollination. So we've got to keep an eye on that. Corn does not like to pollinate in this super heat. But anyway, we will see. There's a Category 1 hurricane that just went through Eastern Caribbean. So we'll see if that hits and sends moisture up the pipe, as we call it, up in Chicago. It all depends on where this thing hits on the Gulf. If it hits in Texas and runs north, then this will be a big, big boon for our farmers here. If it hits New Orleans east and runs up the East Coast, then we've got an issue where this thing is going to suck the moisture down as it sweeps across. So we will keep an eye on that. Weather is definitely dominating the play, dominating the game, and you got to keep your hands on the old hair trigger, because volatility is way up now. Corn at 50% plus. Volatility in corn is now higher than it was in 2012. So what that means is that the market is definitely gun shy. There's big swings in the market. We had, with the crop report that came out on Wednesday, we had a bigger swing than we had in 2017, the entire year in one day, and actually like in a minute, to be honest. So the report came out. The June stocks report has been famous. It has the most volatile response from the markets over time, and this did not disappoint this year at all. We had explosive response to this thing. Corn stocks came in at $4.11 billion, 18% below last year. That's under what we were expecting by about 500 million bushels. We're seeing 3.58, 3.6 billion bushels disappearance for the quarter, against like 3 billion last year. So we're seeing accelerating disappearance even with the higher prices. So of course that ignited the corn market, but of course the big news was beans the the acreage print came out at 87.6 million. I almost fell off my chair when I saw that number. Beans were up $1 in less than a picosecond. And I mean, it is a long time since I've seen, trade to trade was $1. So 1 second it was like $13. Next second it was $14. To give you an idea, on Wednesday, for the first time in my memory, beans traded into $12, $13, and $14 handles in the same day. So what that means is we're starting to see acceleration in the volatilities. The game is definitely afoot because we're concerned about the disappearance. We're also concerned about frost down in Brazil right now, which is, we're burning up here and they're freezing down there. So, it's always the opposite on that other side of the hemisphere. Corn came in at 92.7 million, which was about where I was thinking. I would not have been surprised if it was higher. Informa, their number was, they were looking for 98 million acres. So, I do not know if that was a fat finger problem or if they actually thought we would have 98 million acres. I would have been surprised if there was anything north of 95, to be honest. But yet, I don't have the analytics and the tools that Informa does at this moment. But I tell you what, that bean number at 87.6, I would have lost so much money in Chicago. I'd have been having to buy drinks all night at Ceres because, I would have sworn up and down that we're going to have 90 million acres. So we didn't get it, but here we are. My guess is it's actually out there, but, I'm not going to sit there and bitch like they do on Twitter and say USDA is wrong. We have to trade what the numbers are, and here it is. So the bean number, 767 million bushels in grain stocks, down 44% from last year. So that just shows how much China's been ripping into this market, taking big chunks out of this thing, and of course grinding for soybean oil. The wheat market, 844 million bushels. Stocks are down 18% year over year. So we're continuing to eat into that stocks number. We went for about a half a decade after 2012, where we had over 1 billion bushels of wheat in the United States, in the carryout. So if you think about it, we only grind about 1 billion bushels a year in the United States for our consumption. So we literally did not eat a wheat crop for 5 years because we just kept having enough carryout to actually work for the next year. But we're starting to eat into that, and that's going to force huge amounts of volatility. And we all know what that means in the wheat market because, corn and beans are critter food, as we call it, and wheat is human food. So once it gets more and more volatile, we get the carryouts down where, you got to be concerned about weather or something like that, then wheat is going to start becoming, as we say in the pits, it's going to become civil again. And look out, because what you're seeing in spring wheat could be, the future. But it's yet to be seen, but yet the fundamentals are starting to line up. And we are digging into these huge carryouts from the the mid 2010s. This report, like I said, I've been around a long time. I never saw a buck move, in a second. But I keep saying that things are happening, that I've never seen. And I guess that's food for everybody to think about, whether you're a rookie or even a professional, even people who have been around for 40, 41 years. There's things to surprise you. There's things to learn from these markets, especially as we evolve away from the floors into the situations that we have now, the electronic trading and the 18 hours and soon to be probably 24 hours of trading in the grain markets. So, just learn, stay alive, survive your mistakes, and keep at it, because these markets are getting bigger and bigger, and we won't need grain markets if we stop eating food. So just food for thought about that. So let's go into the individual crops. Corn, of course, had its explosive move, but it was down then up big. The chart is looking very interesting in corn. Okay, if you look at it, we're seeing a huge pennant forming. If we do not take out the highs, it could be over. If we don't take out the lows, it could be over the other way. So the game is afoot. We are running out of time, of course, because we are in July now, And what that means is that the clock is ticking as we're getting closer and closer to the September 15, 21 window where, we start cutting corn here in the United States. So, but that chart is brutally interesting, and be very careful. As you can see, these swings inside, you can lose a fortune just inside these swings, inside this pennant. So this is not a small pennant. This is like 50, 60, 70 cents up to down on the y-axis. So be careful, but keep your eye on that, especially in December. Because right now, you've got to be a real professional to be trading SEP corn, old crop. So you got to mind your P's and Q's here, because, SEP corn, SEP Ds will take you out. And I've seen it move huge one way or the other for no particular reason, just because, July and December are the big months. September is that month where you just got to watch out, sort of like May wheat. So in Chicago, so just be careful there. The game is really in December corn right now. Soybeans, of course, explosive this week, explosive. That chart is starting to look interesting as well. So we're seeing some weakness show up. The top may be in, but yet who knows? Because, this thing could put up another leg, of course, but it could break down depending on rain. So, you got to watch this hurricane, and like I said, watch where this thing hits. If this thing hits Galveston south, 3 days later we're going to have 5 to 10 inches of rain up here. Okay, if it hits New Orleans east, you're probably going to get rain all the way up the East Coast, into the Indiana, Ohio area, which they don't particularly need it at the moment based on that drought map. So, the game is afoot. Be very, very careful. These markets are what separates the men from the boys, the wheat from the chaff, as we say, because the game is big, the numbers are big, the swings are big, and you just got to step back or else lighten up if you're going to be trading, because you're not trading for nickels anymore. These are 20, 25 cent markets every day. So be mindful of that. We're continuing with this destruction of the meal market. It is brutally bad, in my opinion, what that chart looks like. And of course, on the other side is oil. And even with the Supreme Court ruling, they buried the market last week because of that. But now it has recovered because there is continued problems with the canola crop up in Canada. So we're seeing canola just spiking again, even though, it's really more of an oil market now than biodiesel fuel. So having said that, it's just like the tale of two cities, Charles Dickens. And, one of these days, either meal's right or oil's right with soybeans. And, at this stage, I wouldn't bet at the moment, because, when you're in dry weather, you've just got to back off. Instead of trading 100 lots, trade 20 lots. Instead of trading 20 lots, trade 2 lots. So just back off. There's plenty of money to be made. Don't give it all away in one of these monster moves when people just blow their brains out inside the markets. Normally we'd be talking about wheat because of the drought, but this corn and bean move with the stocks was just dominating the news and ag Twitter. But wheat is setting up. We're deep into the main cut. The wheat in Kansas is coming off beautifully. So of course dry weather is great for wheat harvest. It's bad for corn and beans growing, but that's always the case. So every drought you see just monster wheat crops, because not only is this stuff coming out with pretty decent protein because of the heat and the dry weather, but it's also coming out with pretty decent proteins. So that game is definitely afoot, especially with Kansas City. And Kansas City made a 20-cent move against Chicago this week, which I've been talking about the last 2-3 weeks, to watch when Kansas City starts moving. So Kansas City has started moving. Today they beat it up pretty good, but yet keep an eye on Kansas City, Chicago. If that thing starts moving, and if KC moves over Chicago in the new crop, look out. So just food for thought. That's what I'm watching. That's what all the pros are watching, because Kansas City has been buried under Chicago for about a year and a half now. And we even took Kansas City a buck under, if you all remember, about a year and a half ago. And it just destroyed pretty much anything we'd ever seen, because the worst I'd ever seen was 30 under. in my career. And then, of course, we took 30 under, 40 under, blew through that like it wasn't even there, and went to $1 and just wiped out a lot of old professionals, excuse me, who are doing this stuff for a living. But at any rate, we're back in the 20 unders now, which, by the way, is where Minneapolis was not 5 months ago. And now Minneapolis is like $1.50, $2 over. So, keep an eye on KC, Chicago. That is the key. Keep an eye on the bean spreads, because, that's where the big news is. No of March and March, July out in 2022. Keep an eye on those. Get a chart up of them. Keep them close to your desk, because this is where we're going to see the action. And this is absolutely a situation where the spreads are the canaries in the coal mine. So spreads are super important. Don't be seduced by the charts, even though they will give you, what I call the broad picture. But, what's really going to happen and what the market wants to do, the story is going to be told in the spreads. So be mindful of those. We've still got carry. We even got carry in spring wheat. So, when that thing starts turning big positives, look out. So, at any rate, it's really a fascinating market. We said this was going to be at the wheat crop. The first by class estimates are coming out in WASDE in a week and a half. So 2 weeks from now is going to be a very, very interesting fish wrap. And looking forward to see what the USDA is thinking, first day out of the box for the 2021-2022 crops. So having said that, it's been a fantastic, interesting week. Big reports. Of course, Drought Monitor, all the conversation. Ag Twitter has just been on fire the entire week. And of course, we're going to wrap up today's show talking about our new friend, inflation. And I tell you what, it is absolutely a joke listening to these Fed people. I thought these were the smartest guys in the room. They're thinking this stuff is transitory, and it's just like, 100%, increase in crude oil, which the chart here is just devastating, because, every dollar that thing goes up, we're going to lose jobs, we're going to lose freight advantage and everything else, because they are just, this stuff was at $30 last year. It's been 30 to 40, maybe 45, 50 for probably the last 2-3 years. And now all of a sudden we're looking at 75. So what that means is that, the cost of transportation is going to start working its way through. And they're saying the inflation's running at 3.9% with, oil up 100%, freight up 600%, lumber up 800%. It's just like, okay, if that's what you think is 5% or 3.9%, let's have at it. But at the end of the day, it's going to rear its ugly head probably around Christmas. So be mindful of that, because somebody had to pay $100,000 for a cargo container, not a whole ship, one of those things to come across the sea. What was usually a $3,000 container to go from Asia to California and to the West Coast was $2,000-$3,000. He just paid $20,000 for it. So, this is going to work its way into the pricing structures. It's going to be, the inflation you're seeing now is just nominal compared to what's coming. So, that's the talk among the professionals I hang with. And, crude oil above 70 is a problem. And as you can see, we're looking at 74, 75, 76, depending on where you're at on the curve. And that's almost 10% above what's going to really cause this thing problems. 2 days ago, we had $992 billion of reverse repos done by the Fed. Okay? 2008, with the real estate crash, the Congress had to write a check to the banks for $787 billion to pull out of that mess. $992 billion of reverse repos were done 2 days ago. So something is afoot, something not good is happening. And just be mindful, especially the stock market being as elevated as it is, got to be very mindful of where everything is at the moment. So having said that, our production crew from Triple Falls in Mankato has informed me that we will probably not be doing fish wrap next week. Feel free to reach out to me on Twitter or through the website, croptimize.com or thefarmcfo.com. I'll be glad to connect with you, or just chew me out for being wrong on Twitter, which is what you guys usually do. And having said that, have a great 4th of July weekend. And, of course, the markets are closed Monday. And we'll see you on Tuesday. And 2 weeks from today, we'll be back on the air with Fish Wrap from Blue Earth, Minnesota. Thanks, and have a good weekend.